Hey everyone, and welcome back to the Fish Market, where we teach you how to fish for gains. So in today's video, we'll be exploring delta neutral farming to earn up to 50 to 100% APY with almost no risk at all. So let's explore how that's done. Okay, so the content for this video was done quite a while back, but I believe the rates are still the same. And the first thing we're going to explore is what is delta neutral. So delta neutral basically means delta, which stands for direction, and neutral, which means non-biased. So directional non-biased means that you don't really care whether the price goes up or down. So that's essentially what delta neutral means. Okay, so to achieve this, we'll be using the Mirror protocol, which is a Terra ecosystem's investment platform. And we will have two positions. We will have a short position, and short meaning that you bet that the price of the asset goes down, and a long position, where long basically means you bet that the price of the asset goes up. So if you have both 50-50, if the price of the asset goes down, your short basically earns money, and your long loses money. But because they are equal weightage, the amount that you lose is essentially net zero, and the vice versa is true. So if the asset goes up, your long makes money, your short loses money, but the amount that they net off is the same, so it's at zero. Okay, so the first step, of course, is to create a Terra wallet. There is a Terra Station extension. I'll put a link in the description below. And then after that, the second step is to buy UST. So a couple of different ways to buy UST. If you're on Binance, you can send your BUSD into your BSC wallet address for $0 fee. USDT and USDC works as well, but I believe there is a $1 fee for USDT and an 80 cents fee for USDC. So BUSD is completely free, and the liquidity in Binance Smart Chain for BUSD is pretty strong as well. So I recommend BUSD. And then the second thing you want to do is to use nerf.fi. So nerf.fi is a stablecoin swap, and that gives you the best rates to swap your BUSD into UST. It's almost 1-to-1. It's much better than using it on PancakeSwap, for example. And then the third thing is to use bridge.terra.money to bridge your UST from BSC to Terra. Another approach is to directly buy UST on other exchanges such as Gate.io as well as KuCoin Exchange. And when you buy your UST from there, you can directly send it to your Terra address. And if you are already on the Polygon network and you want to enter the Terra ecosystem, the best way to do this is actually to bridge your stablecoins using xpollinate.io from Polygon to BSC. And you don't want to swap your UST inside Polygon, because right now there isn't a stablecoin swap for Polygon. So don't use DeFin, don't use QuickSwap, don't use Dino, don't use any of this, because the rates are not as good if you're going to enter Terra. Right? You want to make sure that you send your USDT or USDC into xpollinate.io into BSC, and then from there you swap your stablecoin USDC or USDT into UST using nerf.fi, and then after that you will send it to Terra using bridge.terra.money. So as I was saying just now, nerf.fi is a stablecoin swap, and the rates are better than DeFin in Polygon, and as well as any other swaps in Polygon, because they don't have a concentrated liquidity stablecoin pool. And nerf.fi, basically, I did a test, right? If you use $10,000 in USDT, you only get $9,885 for UST, so you lose about $100+. Whereas if you use it on nerf.fi, which is in BSC, so you have to bridge it over to BSC first, you only lose about $30, which is a lot better than losing like $100+. Okay, so if all of that sounds really complicated and you're completely new and you just want to buy your UST directly, you can actually use transact.com. I'll put a link in the description, and you can use this to directly use your card to buy UST. So that's really convenient. And I think they accept all kinds of currency from SGD to USD, and you get your UST inside of the Terra mainnet already. So this is very new. It only came out last week, and that's why I'm making this video to talk about Transact as well, because it's a very convenient way to directly enter the Terra ecosystem and buy UST from there. Previously, you only buy UST on the Ethereum mainnet, and then you have to bridge from Ethereum to Terra, which would incur you additional gas fees as well. Okay, so now that you have your UST inside the Terra ecosystem, the first thing you want to do is, we'll assume that you have about $10,000 and you want to deposit half into Anchor. So Anchor Protocol is a savings platform. You get to earn up to 19.57% APY. That means that after 1 year, if you don't take it out, you earn about 19.57%, which is incredible. So the reason why you want to deposit UST into Anchor is because you can actually use the UST inside Anchor as collateral when you're doing the short leg. Because DeFi is not KYC, you need to over collateralize any of your loan position. So when you create a short, it's actually a loan position, or sometimes known as a collateralized debt position, CDP, and this requires you to over collateralize it. That's why you need to provide collateral. But using Anchor, using your UST inside Anchor as collateral, allows you to earn an additional 19.57% whilst you providing the collateral. So it is pretty awesome. Okay, so the next thing you want to do is to take the AUST and then you short half of it of an M asset because you require 200% of over collateralization. So if you want to short, let's just take for example MUSO, which is the Mirror US Oil Fund, you can actually earn up to 48.53%. This number does change quite often, so please be sure to double check it on the Mirror website itself. The Mirror website will be linked in the description below. And this will allow you to earn the 48% short farm as well as the 20% anchor that you're anchor interest that you're earning from your UST inside Anchor. So this is pretty awesome, and the numbers do add up. So I'll be showing a breakdown of all the numbers in a bit. Additionally, if you don't want to do any volatile assets, you can actually short gold, but I believe the short farm for gold is really not very worth because a lot of people are shorting gold as well because of the non-volatile nature of it. So I think you don't really need to care too much of the volatility, because if you are going to be doing delta neutral, like pure delta neutral, then you want to get the one that has the most consistent percent in terms of the short farm. And with that, you're basically done. So now you have 2.5k of the M asset, and you're pairing it with 2.5k worth of the liquidity, as well as at the same time you have 2.5k of the short M asset that you are shorting, and you're providing another 2.5k as collateral to over collateralize it. So in total, you have the same equal weightage for both the short and the long, and you are basically delta neutral. And the amount of APY that you earn will basically be the average between the long farm and the short farm. And then you need to add the $5,000 that you are actually providing on UST Anchor. So that's additional 20%. Okay, and with that, you're more or less done. You will start to receive Mirror tokens as reward for providing liquidity. And with that Mirror rewards, I recommend staking it. So why do you want to stake Mirror and not sell it? Firstly, you get to earn about 20 to even 90% APR when you stake Mirror, and that's pretty good. But the most important thing right now is I feel that Mirror is quite undervalued. So I have actually looked at the metrics in terms of the fees generated from Mirror, and then did like a PE ratio and price to sales ratio on Mirror, and right now it's quite low. It's around 10, I think, around there, plus minus a bit. And then I've compared that with other platforms like Synthetics and Linear Finance, which are also other type of investment platforms on DeFi. And I've also compared them with traditional exchanges like your Futu or your iFast, etc. And those valuations are quite high in terms of the PE ratio, although their growth rate is pretty good. So, but purely in terms of PE ratio, I think Mirror is quite cheap, even compared to other competitors like Synthetics and Linear. So that's why I don't recommend selling it right now. So when the price goes up, if you don't sell it now, you get to benefit from the price appreciation as well. And on top of that, you get to vote on the next Mirror asset to get listed. So you can actually, if you actually like to do investments, sometimes you might see a Mirror asset that you actually want to purchase get listed. Then you can actually participate in the governance and get to actually experience what decentralized governance feels like, where you get to vote on proposals, and it's pretty cool. Okay, so there are a couple of different strategies. All of these will be in the description below. So I have prepared a few spreadsheets, and basically the most safest and the simplest one is the one that I just mentioned, where you just provide 50% on the long farm, 50% on the short farm, and each of them is also split between half-half UST and Mirror asset, half-half UST and the short mirror asset, and that gives you about 46% APY at the moment on average, right? So the next one is basically strategy 2, where you start off with B Luna. So this is not purely delta neutral in the sense that you are actually exposed to the price of Luna. And generally speaking, I think Luna is a token that will go up over time. So what we are doing is we want to use B Luna first, and then we use it to borrow UST and do delta neutral farming. Because when you borrow Luna, you are able to collateralize that bonded Luna to borrow UST. And right now there's an incentive program where if you bond Luna and you borrow UST, you actually get paid to borrow UST, which is pretty insane if you think about it. You actually get paid to borrow. So right now the earnings I think you get is about 30% on the amount that you borrow on UST. So you want to not just put in UST, you want to borrow UST and put that in. So when you do that, you get paid to borrow, and as well as you get the exposure to Luna price appreciation. So in order to do this, basically you use 5k to buy a B Luna on TerraSwap first, and then you would borrow 30%. That would be 1.5k UST via Anchor, and then that's your first 5k. This is assuming you start with 10k also. And then after that, you would use your UST and your borrowed UST to do the long and short farm. So you start with 10,000 and then you borrow 1.5k, and then after that you would use the 1.5k together with the other 5,000, and you would do a long farm, short farm 50-50. So this gives you a APY of 38%, which is lesser than the first one, but you get exposure to Luna token. And the difference between strategy 1 and strategy 2 is about 8% APY. But I strongly believe that Luna should go up more than 8% per year. In fact, this year alone, it has went up about 1,500% or 1,500%. So 8% gain in Luna should be realistic. Yeah, so that it should be more than 8%, I believe. Not financial advice. So this strategy is for people who are a little bit more bullish on Luna and is a bit more risk on. Okay, so the third strategy is the riskiest one, because you will not just be using the discounted B Luna, but you'll also be using unaudited vault to put your long farm. So this is the same step as strategy 2, but instead of putting your long farm into Mirror, where you have to compound manually, you would put your long farm into Spectrum, where they would automatically help you to sell your Mirror and then take the proceeds and split it into half back into your long farm, and it will just keep auto compounding. So that strategy is a lot faster in terms of your gains, a lot higher in terms of your gains because of the nature of auto compounding. So I believe it auto compounds maybe a couple of times a day, which makes it a lot more higher in terms of the gains that you earn. Okay, so this is Spectrum protocol. So if you take a look, you can see that the APY is actually higher. The reason why they cross it out is because the amount that is crossed out is actually the APY that you earn if you just hold it in Mirror and you don't auto compound. And the new number is the amount that you earn if you auto compound. So as you can see, it's a lot higher. Okay, so this is the spreadsheet, and basically you can adjust the APY according to your APY of the farm that you're participating in. And in Spectrum, the APY is usually quite high, so I already put down about like 100% as the default. And then on Mirror, the long farm, short farm usually is about 30% for long farm, and short farm is about 40% around there. So all the numbers are there. And the anchor net burrow is basically the number that you see over here. So this is the net APR. So right now the APR has dropped a lot. It used to be about 100% APR back when nobody wants to borrow, but they had another update and improvement proposal that reduced the liquidation ratio to 60% instead of 50%, and that encouraged a lot more people to actually buy UST. So you see I have a bit of collateral here, and I am borrowing 17% because I am conservative, but I think you can increase this if you want to be more risk on. And I also did up a anchor borrow calculator. So this basically would tell you what is the amount of Luna price dropping before you get liquidated. So with the max LTV of 60%, and if you borrow up to 30%, you need Luna to drop 50%, which I don't think it will drop 50% in a single day. So that gives you time to react, but anything is possible. In May, I think Luna did drop 50% in a single day. So definitely want to make sure that you always have excess cash to buffer your positions, especially if they're on margin or collateral. Again, none of this is financial advice, so please do your own due diligence, and I just thought I would share my different strategies that I am doing right now. And if you are wondering, I am doing all three of them, or at the very least, I've tried all three of them. And at the moment, I am on strategy 3 as the bulk of it. Yeah, but I'm also not doing delta neutral. So if you're wondering what am I personally doing, I think only about 5% of my entire position is a short. 95% of it is a long. And why do I have a 5% short? A 5% short is a nice way to hedge my emotions. In case market crash, I can at least say, hey, I have a short position that's making money. Honestly, it's not financially practical, but it is emotionally practical to me in a way. Because if the market goes up, I lose 5% of the gains. And that's not too much because I earn the bulk of it. But that 5% short when the market is very bad can sort of make me look at that green number there, which makes me emotionally happier. So yeah, I think that's pretty nonsensical advice. Please don't follow that. Do your own due diligence and do your own investment style. Everybody has their own style, so just do what you're most comfortable with and most confident in. And yeah, if you found all of this video useful, please like and subscribe, and I will see you guys in the next video soon. And if you have any type of video that you want to see next, you can post it in the comments below. Yeah, so I can do like on-chain analysis, I can do technical analysis, etc. But overall, I think most people want to see more farming videos, so I'm just providing more farming videos. Yeah, so hope you guys found this video useful, and I'll see you guys again soon. Bye!
Baby fish, baby fish,